Ladies and gentlemen, good day and welcome to the Q3 and 9 months FY23 earnings conference call of Salzer Electronics. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rohit Ohri. Thank you, and over to you, sir.
Thank you, Rutuja. Good morning, everyone. On behalf of Progressive Shares, I welcome you all to the Q3 and 9 months FY23 post-earnings conference call of Salzer Electronics Limited. This conference may contain forward-looking statements which are based on the beliefs, opinion, and expectation of the company as of the date of this call. These statements are not guarantees of future performance and may involve risks and uncertainties that are difficult to predict. I now invite Ms. Savli Mangle for the opening remarks to be followed by the question and answer session. Over to you, ma'am.
Thank you, Rohit. Good morning, everyone, and thank you for joining us today. I have with me Mr. Rajesh Doraiswamy, our Joint Managing Director, Mr. Lakshmi Narayanan, Vice President Operations, Mr. Murugesh, Assistant Company Secretary, Mr. Menka, Assistant GM Accounts, Mr. Venkatachalam, GM Commercials and Accounts, and Mr. Raman, COO of KC Industries. I will now take you through the standalone financial performance of the third quarter and 9 months ended December 2022. During the third quarter, our revenues increased by 13% year-on-year to rupees 239.95 crores from rupees 211.83 crores in the corresponding previous period. This growth was driven by higher demand for switchgear as well as building product businesses. The EBITDA, excluding other income, was rupees 23.74 crores as against rupees 17.68 crores in Q3 FY22, a year-on-year growth of 34% on account of increased sales in the switchgear industry despite there being a slowdown in the industry. The EBITDA margin for the quarter was at 9.9%, a rise of 155 basis points year-on-year, mainly on account of increase in sales from higher margin industrial switchgear products. The PAT was at rupees 9.67 crores as against rupees 7.25 crores in the previous corresponding period, a year-on-year growth of 33%. Coming to a 9-month financial performance, the net revenue was rupees 776.96 crores as against 555.61 crores in 9 months FY22, a year-on-year growth of 29%, driven by the businesses of industrial switchgear and building products. The EBITDA, excluding other income, stood at rupees 67.84 crores as against rupees 58.89 crores in 9 months FY22, a year-on-year growth of 33%, mainly on account of higher sales during the 9 months. The EBITDA margin was at 9.45%, a year-on-year increase of 29 basis points. The PAT was at rupees 27.41 crores in 9 months FY23 as against rupees 18.66 crores in the previous corresponding period. The PAT margin was at 3.82% as against 3.36%, a year-on-year increase of 46 basis points. Moving to the breakup of the revenue as per business divisions, the industrial switchgear business contributed to about 58% of the total revenue in the quarter and about 55% in the 9 months. EBITDA margin in this business was about 13% in Q3 and 12% in 9 months. The Q3 FY23 saw a year-on-year improvement of 227 basis points. One of our high-demand products, the 3-phase dry-type transformer, grew about 174% year-on-year and in the quarter and about 138% in the 9 months, while our product wire harness grew 8% year-on-year during the quarter to 16.16 crores and 5.8 year-on-year in the 9 months ended FY23. The wiring cable business contributed to about 35% of the revenue this quarter and 37% in the 9 months. The division revenue declined close to 10% year-on-year in the quarter, mainly on account of a slowdown in the agri segment, leading to lower sales volumes. High inflation led to lower spending in rural markets that resulted in degrowth in the segment. However, wires and cables grew 13% year-on-year in the 9 months, and the EBITDA margin for this business division stood at about 6.5% in Q3, declined 74 basis points year-on-year due to lower sales and increased volatility in copper prices. The building product division contributed to about 7.5% in this quarter and 7.8% in the 9 months. The EBITDA margin of this business was about 2.65 in Q3 and 2.69 in the 9 months FY23. On the export front, we continue to see steady growth, mainly on account of higher sales in America, including South American countries like Brazil, Argentina, and Chile. Exports to the Americas grew 43% year-on-year in the quarter, while exports to the Middle East and Africa grew 77% year-on-year in this quarter. For this quarter, the export share of revenue was 28%. Growth in exports have been 46% year-on-year, and for the 9 months, the exports were about 25% of the revenue, growing at 32% year-on-year. Thank you so much. I would like to now hand it over to Mr. Rajesh Doraiswamy to take us through the business developments and the way ahead. Over to you, Rajesh.
Thank you very much, Savli. Good morning once again to all of you. Looking at the market scenario and the current geopolitics and economic volatility in the world today, the overall volatility is quite high and it's likely to continue in the future as it is. However, India is expected to grow despite all these global turmoil, like strengthening of dollar, elevated inflation, increasing interest rate, maybe pandemic fears, and steep depreciation of INR between July and December 2022. We also saw a lot of supply chain constraints in the last quarter. As per the market reports, I think India's exports are likely to grow in 2023 despite the impact of global slowdown and several positive tailwinds. I think the country is targeting around 480 to 500 billion in exports by end of 2023. The impact of the country's production-linked incentives, PLI scheme, on key sectors such as electrical, electronics, automobile, and also the India's integration into the global value chain, supply chain, and effective free trade agreements signed with various countries will only boost access for exporters like us into various new markets and will spur the foreign direct investments into India. Now coming into our company and its business performance, as we have heard from Savli, our third quarter performance has been in line with our expectations. Despite a tepid demand, we witnessed some good traction in our industrial switchgear business and also building product segments. The raw material prices have begun to stabilize, and we are seeing the benefits of our price hikes also in the form of better margins quarter on quarter and year on year. We also expect that this raw material consumption cost will further come down going forward in the coming quarters. Something about the recent developments, I'm happy to share that we continue to see substantially higher demand in many key products, particularly from the new businesses like the transformer business, the wire harness, the three-phase transformers. To cater to this strong demand, we also recently set up a new manufacturing facility in a rented space in Hosur, Tamil Nadu, to manufacture wire harness and transformers. This is with an initial investment of rupees 15 crores, and the new facility is spread over 30,000 square foot and is aimed at creating additional capacity as well as being closer to our customers in Hosur. In the first phase, I think we will be using close to around 15,000 square foot, and the balance will be used in the second phase. Commercial production is full commercial production is expected to start from March, April 2023. With regard to the joint ventures in the EV segment, we are seeing good traction in the EV charging space, where our collaborators technical team is staying here to help us build the chargers in India. We expect the India-built fast charger for Indian markets to be ready for testing, approval, and also for sale by June, July 2023. As far as our subsidiary KC Industries is concerned, the third quarter revenues increased by 24% year-on-year to 10 crores. The sales have been growing very well in KC with good margins of 11.4% EBITDA and 8.4% PAT level. We expect KC to continue to grow at 30 to 35% level over the coming quarters. Going ahead, we expect to maintain our growth trajectory combined with strong product offering and brand position in the market. Based on the domestic and export outlook, we are optimistic on our overall business performance for the next year also. We continue to target achieving a consolidated revenue of 1,000 crores and a 40 crore PAT for FY23, and we are working very hard to achieve this target. On behalf of the company, I thank the entire team at Salzer Electronics Limited for their untiring efforts, and also all the stakeholders for their continued support and faith in Salzer. Wish you all good health, and this is all from our side now. I would like to thank everyone for your time and attention. We can now take questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Gaurav Sachdeva from Further Investments. Please go ahead.
Good morning, sir. Congratulations for your great set of numbers. So my first question is regarding the wire and the cable.
Sorry to interrupt you, Mr. Sachdeva, but your voice is not clear, sir. We are unable to hear you clearly.
Hello, is it audible now?
A little bit louder, sir.
Is it audible now?
Yeah, it's better.
Hello. Yes, sir. My first question is regarding wire and cable division. Our sales is almost the same, near 83 crore in Q2 and Q3, but EBITDA has dropped from 7.7% to 6.56%. Is it only due to the copper price increase, or there is some other reason also? Because sales is almost the same.
Mainly because of copper price fluctuation. The volatility in copper price is the main reason for reduced EBITDA.
And what are the current prices of copper? I mean, it has increased.
It's ruling at higher levels only, but it doesn't matter whether it's high or low, but the volatility is what matters.
Okay. And sir, overall, we were expecting a 1% increase in EBITDA in the coming quarters. Can we see at least 11% EBITDA for FY24?
Oh, yes, for sure. Yes. Yeah. That I think we will be back to that level in FY24.
Okay. And sir, can you tell us at what stage exactly we are there in the electric chargers? Because in the previous calls you said that it will be ready by March 22. Now you are saying that in July 22. Exactly at what stage we are in? Are we in the testing phase, approval phase, or what phase we are in the electric charger?
We are in the prototype stage. Actually, the product is a little bit complicated technology-wise. So the absorption of technology is taking time, and sourcing of various components for the product also is taking time because the components are not available in India. So most of them are imported. So we are trying to localize whatever possible, and we are trying to source the imported components. And we are at the prototyping stage right now.
Okay. And sir, my another question is that any advancement we have done in the conversion kit?
No, sir. As I have said a few quarters before that, I think we are going slow on that, and because of various reasons and because of the market potential, we don't see a great potential in that as of now because of the the technology. So we are going slow on the auto conversion kits.
Okay. And sir, regarding the building product division, right now our EBITDA is only 2.56%, although it has increased from what we were in negative. But can you tell me the scalability of EBITDA if we talk, suppose the current revenue is 18 crore, if we move it to 36 crores or 50 crores, what will be the EBITDA at that revenue? Can you scalability of
Currently, we are at around 70 crore run rate. That's the annual turnover we will reach, hopefully, this year. In my opinion, I think the critical sale level is close to around 100, 120 crores. So if we can cross that sale level, then you'll see a jump in EBITDA levels to around 8-10%.
8 to 10%. Yeah, that's great. And sir, what is the top line growth we are expecting in FY24, if you can tell us?
Conservatively, I can say we should be growing at around 20%.
Around 20%. Thank you. That's from my side. Thank you, sir.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello.
Good morning, sir.
Mr. Poddar,
Yeah,
please.
very good morning, sir, and thank you very much for the opportunity. So I just wanted to understand, first up, I mean, this year, 1,000 crores revenue and 40 crores PAT. So is KC included, or is the standalone guidance that we have?
On consolidated basis, sir.
Because earlier we were talking a much higher number, right? I mean, we were talking that second half we might do 550 to 560 crores revenue with higher EBITDA margin. But this quarter we did not see improvement in margin that we were kind of expecting, right?
I think we did have some improvement in the margins. If you look at the year-on-year or
Quarter
compared to Q1 and Q4, maybe compared to Q2, we are on the same lines. Yes,
Yeah.
because there's not much improvement compared to Q2. But compared to Q1, Q4, I think we're definitely getting better, and I'm sure that Q4 will definitely be better. One of the reasons that Q3 went down because our wire and cable also pulled us a little bit down. Otherwise, we would have been up by at least 50 basis points.
Okay. Now you mentioned in the opening commentary as well that now the raw material prices have stabilized, right? And even the price hike benefit you will start to see. So fourth quarter onwards, one can expect 11% margin. I mean, because it's generally your best quarter, right?
Yes, definitely Q4 is the best quarter, but straight away from around 9.5, 10 to 11, I doubt whether we will reach that in Q4, but definitely we will see improvements in Q4 and in Q1 for next year. And then we will stabilize at around 11%.
Okay, fair. I understood that point. And so KC, what is the KC top line and bottom line? I mean, just a rough cut, what we are expecting this FY23?
FY23 KC top line will be close to around 42, 43 crores. We have already done 30 crores for 9 months. And bottom line will be close to around 3 crores at PAT levels.
Okay, 40 to 42 crores is top line and bottom line is 3 crores. Okay, understood. And I understood this one. And my final thing I just wanted to understand was something on the EV side. Now you mentioned we are in a prototype state, and by maybe June, July, we'll be ready for production, right? I mean,
yes.
So what sort of revenue trajectory one can expect in the EV segment? I mean, how would you see the revenue scaling up in that? I understand it might be quite challenging for you to guide, but just a rough, if a flavor that you guys might be thinking.
Guidance only I will be able to give because the market is still evolving. Market still, I would say, not mature. It is still in a very early stage. So even the revenue models are not very clear. So there are different revenue models for the charging stations. One we can sell to consumers who want to buy and use it, which are very few right now. The second is we have to go and find the service providers who will buy and install our chargers. So even the revenue models are not quite clear as of now. But I'm sure that there is a huge market and potential that will just open up in the next 1 or 2 years. So to give a guidance, we are actually planning to build at least 50 to 100 chargers a month in the first year.
First year means FY24.
Yes.
50 to 100 chargers. And per charger is what, 8 lakhs rupees ASP?
Around 8 lakhs, yeah. So in the first year, I think there won't be much business. Let's look at like 20-25 crore is the top line that we should be expecting. But the scalability for this is we can say that it can go up to around 700-800 crores. In next 2 years.
Yeah. That is our maybe a little longer term target, right? I mean, maybe 3 to 4 years. But even 100 chargers at 8 lakh means only 8 crores, right?
Yeah. And then we will only have 6 months with us.
Achha, 6 months in that way. Okay. Fair. And next year, I think earlier we were kind of seeing that 100 crores maybe from EV segment we might want to target, right?
Yeah. Still the plan is that I think maybe the FY25 we should be able to do that.
Yeah. Fair enough. Okay. Yep. That's it from my side, sir. Thank you very much. All the way.
Thank you.
Yeah.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Senthil Kumar from Joindre Capital Services Limited. Please go ahead.
Good morning, sir. Thanks for the opportunity. Am I audible, sir, firstly?
Yes, sir.
Yeah, thank you, sir. I have 2 questions, sir. First one is, with the thrust on infrastructure in the budget, what is the growth prospects for the company going forward, sir?
No, actually, the growth prospects of Salzer is quite positive, quite good. We are very positive on the growth that we will be achieving in the next couple of years. And whatever has happened in the budget, whatever additional capital outlay they have given for the capex is definitely supportive and will further enhance the business across various sectors that we are dealing with, which will definitely help in the growth of the company.
Can you please name the few segments, sir, particularly?
No, I think if you look at the product segment that we are dealing with, I think we are serving to almost all sectors, all kinds of infrastructure sector, renewables, power sector, machine tool industry, automobiles. So across sectors, I think our products are being used. So any capex in any field will definitely help the growth of the company.
And my second question is, what is the incremental revenue we can expect post completion of this phase 1 new plant, sir, in Ozore? Actually, commenced up operation, but fulfilled.
Ozore is just an expansion of our existing operations. So I think it will just help aid our growth, whatever we are talking about, 20-25% growth we are looking at. I think this will just help in getting that growth.
Okay, in addition to that. And my final question is, what is the working capital cycle as on 31st December 2023, sir? Sorry, 22.
We are at around 130 days on 31st December.
Okay. The inventory days and data days?
Around 125. We were at 125 days in September. We have gone 5 days down to 130.
Okay. The data and inventory days?
Sorry?
Data days and inventory days?
Inventory is at around 95 days. Data is around 75 days.
75 days. Okay, sir. And my final question is, what is the other status of the other joint ventures, sir? Conversion kit, what is the growth?
Conversion kit, actually, we are not going slow because, as I mentioned earlier, the technology for auto conversion kit is not easy to be implemented in this country because of the various designs of auto that's available in the country. So we are not moving forward. Not moving forward in the sense we are going slow in that. On the conversion kit, we are not investing. We are still doing a lot of market study and revamp on the technology. So that will take some time. So as of now, there is no progress on the conversion kits. But as charging stations, as I mentioned for the previous question, we are there at the prototype stage, and hopefully by June, July, the product will be up for sale.
Okay, sir. Okay. Thank you, sir. That's it from my side. Thank you.
Thank you. The next question is from the line of Panjal Agrawal from Green Portfolio Private Limited. Please go ahead.
So first of all, in the presentation it is said that we also expect to reduce raw material consumption in the coming quarters. So I wanted to ask, how exactly are you guys planning to improve the efficiency, and what will be the impact on margins?
Ma'am, if you actually go back to the results of a few quarters like Q4 or even Q3 last year, Q4 last year, and Q1 last year, our EBITDA margins dropped significantly, mainly because of our raw material costs going up. And this was the post-pandemic effect of the inflation, and all the material costs went up, whereas we couldn't really increase our prices in the market, and that's where our EBITDA margins dropped. So we, over the last 2-3 quarters, we have increased our sale prices. At the same time, the raw material prices also stabilized and reduced a little bit, which has helped improve the EBITDA margins from around 8 to 10% back. So what we by the raw material consumption going down is, I think there will be further improvement on the realization of our prices, which will further increase our EBITDA by at least half a percent to 1%. So to that extent, we will see the raw material consumption going down.
Okay. So could you give me the current capacity utilization segment-wise?
Across factories, I think we are between 65 and 80%.
Okay, 65 and 80%. Because now we are doing a capex for wire harness and toroidal transformers. So what is have we utilized the capacity for these two products?
Yeah, I think whatever capacity we had in our in-house, I think it has been utilized, and that's why we are expanding in Hosur.
Okay. Possible reason for better demand for these two products?
One, I think this is a new product for us, and we have been a preferred supplier with various customers across the world, various OEMs, and the business for all these customers are increasing, particularly in India. I would say good demand for our products, wire harness, with our customers. The reason I would say, I think the overall the country's economic activity is much higher, and we see demand coming in from various sectors. So that is the reason that the overall business is getting better. And we also see very good demand coming from the renewables, solar in particular, various projects happening across the world. I think that is also spurring the demand for our products.
Okay. So could you give me the current order book if possible?
We actually don't operate on a large order book because mostly our business is like 4 to 8 weeks delivery. So we only have forecast. So only based on that forecast from our customers, we do a projection, and that is how we come up with our revenue guidance.
Okay. So one last question. That export to Asia has increased from 7.9% to 13.4% in this quarter, from year-to-year basis. So how maintainable would be that?
I didn't see exports to Asia increasing this quarter. Is it gone up like that?
So it's on year-to-year basis, given in page 9 of the presentation.
Okay, the growth.
Yeah.
But it's been a low base last 9 months, if you see. I think that's one of the reasons that it has gone up. Otherwise, the exports have been quite stable with Asia. We've been doing around 6-7 crores every quarter. I think last year it was down to around 3 to 4 crores. That's why we see a growth this year.
Okay, sir. Thank you. So that's it from my side.
Thank you. The next question is from the line of Kunal Patel from Equilgence Capital. Please go ahead.
Yeah, thanks for the opportunity. Sir, I'm new to the company, so pardon me for some basic questions. Sir, if I look at your gross margins, it used to be somewhere around 35% to 40% 2, 3, 4 years back. Now it has gone down to around 25%, 28%. So by when can we see 30-35% gross margins from here on, in your best judgment?
Okay, 30% gross margins when we didn't have wire and cable as a part of our business. Wire and cables business also was very low in terms of revenue share. So that's when we had this kind of a margin. So once wire and cable business share in the overall business increased to around 40%, then the overall gross margin started coming down. That is one. Secondly, it's also the mix of the product that we see. When we sell a lot of products that uses commodities like copper and PVC and plastics, automatically the gross margins reduces. However, there is a absolute number that will be going up. So I don't see that we are going back to 30% gross margin level. The main reason is because we have a 40% wire and cable where the gross margin levels are much, much lower.
So in your assessment, what could be the best gross margins we could achieve?
24-25% gross margin levels, if we can achieve and maintain, that will be very good for the business.
Okay. Second question, in our other expenses, what portion is fixed and what is variable?
Good question, sir. I don't have a figure right now with me, but I can note it down and get back to you on that.
Okay. So again, both the questions that I've asked is largely to understand what kind of operating leverage we can have over next 2-3 years when we grow at, say, 20-25% for next 2 years. So you have already guided for FY24 20% growth. Margins, you said it would be roughly around double digit, 10-11%. So we are already operating at 9% right now. So with 20% growth, why our margins cannot go to 12-13%?
Good question. I think I will have to work on what you have said and then get back with the numbers to you.
Okay, understood. My final question is your EV charging. It's a JV, right, where you have 16% stake? Is my understanding correct?
We have a 26% interest in that.
26%. Okay. So
we have the rights to go up to around 50% on that.
Okay. So this 700-800 revenue that we are talking about is at the JV level, and we'll get 25-26% of that, right?
Yeah.
Okay. Thank you so much, sir.
Thank you, sir.
Thank you. Reminder to the participants, to ask a question, you may press star and 1. The next question is from the line of Janish Shah, an individual investor. Please go ahead.
Hello.
Good morning, sir.
Good morning. Yeah. So, am I audible, sir?
Very much, sir.
Yeah, sir. So I have, a few questions around the quality of the growth which you are expecting. Saying we are expecting a growth of 20% next year, and you said next couple of years the outlook looks good. But when we are looking at, I think some of the comments you made in the beginning of the call was that the tepid business environment and also the rural demand getting impacted, which has had an effect on the wiring business, the wires, cables and wires business. So if you can just give some understanding as to when we are looking at, let's say, a growth step up or a growth for next year, what are the enablers or which are the factors which you think, and you also said that you have also got a guidance, like basically you take a clue from your clients as well. So just, if you can just give a color on the growth, how confident or what are the risks which basically you see to these numbers, especially in an environment where globally economic situations across different geographies have been very, very challenging.
You're absolutely right, sir. I think the economy currently in the global market is quite complex. I think certain markets are growing, certain markets are are not growing, and we don't know what the future is in certain markets. The inflation in the Western countries is quite high. So it's actually a very quite uncertain period, I would say, in my opinion. And people expect that the US and Europe will definitely go into recession in the next few quarters. That's been a talk for the last 2 quarters, and we also see the interest rates in both these countries gradually going up. So with all this, and also the uncertainties of the war and the geopolitical situation across the world, we are still able to see some positivity for us, for Salzer, is because whatever we have done in the last several years, the products that we have developed in the last 4 or 5 years, the customers that we have acquired in the last 4 or 5 years, the work that we have done during COVID and the customer acquisition we have done during COVID, I think they are all coming to give revenues to us at this point of time. So in spite of the global slowdown or maybe the global uncertainty, we are still confident of at least 20% growth. It's because of what we have done in the past few years. So that's where, as I said, my forecast for my customers, the new customers that we have got. So we see these people giving business. Even though there will be a slowdown globally, we will still grow at 20%. That is one. Second, I think in spite of global slowdown, I think India as a country, I think, is still strong. We see still reasonable demand from all sectors coming from within the country. So the country is still growing. The GDP is expected to grow at around 6.5% to 7%, which is quite good in this condition. So that growth will further give us the growth for Salzer. So I'm only saying conservatively we are at 20%, but if things go well across the world, I think we can still grow faster.
I think that's very encouraging from your side, sir. Maybe breaking down basically business into 3 segments. I mean, where do you see the tractions likely to come from for this growth? I mean, for 20% growth. And second, on this building products, I think you clearly said that 100 crore is a level where the EBITDA margin can clearly move up to 8 to 10%. How much time we are far away from that mark, to reaching to that level? And because everything what we are trying to get is that the kind of growth which you're talking about, the operating leverage and these kind of enablers, it clearly indicates that you have the ability to grow, to go past the margins well above that 11% mark. But we are just trying to get some understanding. I mean, maybe we are missing some of the piece in between. So that's why we just wanted some more color from your side in that.
I only don't want to promise something and not deliver, so that's why I'm underquoting and being conservative here. No, you're right. I think the building segment, if you see, I think this year we will close to around 75 crores top line. That means we have doubled in 2 years compared to what we were in FY21. So our original aim was to actually double it this year from 50 to 100, but we are at around 75. So I'm looking at least 120 crores for next year. So next year should be a turnaround year for that segment, where we see improvement in sales considerably and also improvement in the profit margins, the EBITDA margins. One. Second, on the growth that we see, I think the majority of our growth we are expecting only from our industrial switchgear products. Already we see that the share of industrial switchgear products have gone up by around 50% compared to what it was earlier, around 40-45. So I think it will continue to grow. I think that is where we see demand coming from for all our products. Not that the wire and cable will not grow, but I think the growth in wire and cable will be slower compared to what the growth we see in the industrial switchgear products.
And maybe on one, if you can give a little understanding on how the working capital is going to look like. You already said it's more closer to like 130, 35 days. As we see the change in the mix of the business, do we see when working capitals to be, cycle to improve, or like will have a more requirement for working capital? How is going to happen? And maybe the last thing is on the debt. How much is the debt as on December? Thank you, sir.
As I had said in my earlier calls, I think our target, our net working capital days target is close to 100 days. That's what we want to achieve.
Yeah.
This year, I think end of the year, we thought we will end up at around 120 is what I'm looking at. We actually came down to 125 days last quarter, but unfortunately it went back to 130 this year because of increase in inventory by around 5 days and also decrease in the payable days. So it's a combination of inventory, receivable, and payable also. And for us, I think the payables are always lower because of the kind of material that we buy. So that's also one of the reasons that our working capital cycle is a little higher. But in spite of that, I think we are working hard to bring this inventory down. So hopefully in the next three quarters, I think we should come to around 110, 105 days level. So if we come to that level, I think that will be the best for the company. So on the debt side, I think we are at around 250 crore debt on the working capital side today, and on the term loans, I think is almost nil.
Okay.
Around 7 crores. Yeah, 7 crores.
Okay.
And we're also very clear on the working capital debt. I think we won't exceed 20-25% of our revenues. I think that's a benchmark that we're having. 20 to 25% of our revenues, not more than that, we should have a working capital debt. And we have been at that level historically.
Okay. Thank you, sir. Thank you for such elaborative answers, and best of luck for the future.
Thank you, sir.
Thank you. The next question is from the line of Karthikeyan from Suresh Advisor. Please go ahead.
Yeah, sir, good afternoon. Some basic questions on your EV charger business. 3-4 components to it, so kindly clarify. One is, can you highlight the extent of import sensitivity in this business? I mean, what is the level of imports that you are looking at out here, and maybe some sources, if you could highlight. Secondly,
in terms of value, I think I would say around 60% will be imported.
60% will be imported. Okay. And in terms of configurations, would these be targeted at 2-wheelers or also 3 and 4-wheelers, sir?
Only 4-wheelers. These are only for 4-wheelers. Yeah.
Oh, okay. So these would be DC chargers for 4-wheelers.
Yes.
Oh, perfect. And the third question, sir, just trying to understand, this was thought through. Assuming that leasing becomes critical or balance sheet becomes critical for this business going ahead as a business model, what has been the thinking on that particular aspect by both the partners in the joint venture?
You're talking about the EV chargers, right?
I'm only talking about the EV chargers.
Yes, I think you're absolutely right. As I mentioned, that the revenue streams are still not defined for this this product. But with the JV that we are looking at, I think we are only looking at building products and selling. So I don't think that will become balance sheet heavy as of now. But right. if the company has to grow, if the unit has to grow, then we have to definitely look at the servicing aspect as a third-party service provider. Right. Our aim is to create a separate vehicle for that. And then from this company, I think we will do a subsidiary, 100% subsidiary for that, and then start doing the servicing. So that company can be separate, and we have to look for further investment or debt or whatever it is in that step-down subsidiary.
And what would be the primary import sources there? Would these be?
In the sense, you are asking about the country?
Yeah, country and also components. That would some clarity on that.
The components right now we are sourcing. They're coming from Europe.
Okay.
But I think there are also certain components that are coming from China.
Mm-hmm.
Whatever is coming from the Europe, I think over a period, I think we will localize in the country here in India.
Okay. Mm-hmm. Okay. Thanks for these clarifications, sir, and very best wishes. And did you say that you would get to 750 crores in the third year or something? $100 million roughly?
Hopefully, yes.
Right. And if you had to give us a ballpark assumption, so what market share would that represent for you in the charger space?
Very, very difficult to assess a market share as of now because we don't know what market size is as of now. So we are only expecting the market size will grow and then we will be able to clock this turnover. Our estimation is even if 10% of the market share we can get, that should be good enough.
Fair. Thanks very much for answering my questions, sir, and very best wishes.
Thank you. The next question is from the line of Kunal Patel from Equiligence Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity again, sir. One question. What kind of return on capital you are expecting or return on equity you are expecting over the next 2-3 years? Because if I look at your business and ROCs for past 10 years, it has been roughly around 10%, which is very subscale, substandard if you look at the business overall. So what kind of returns you are expecting? And so that is my question.
Our internal target for ROCE has been 18%, and we are trying to get there. Unfortunately, we are not going there right now. It is close to around 11% or something. Hopefully, by the next 2 years, I think we should be able to get to around 18% ROCE level. That's the target that we have internally.
Okay. So that would mean your margins has to go up significantly from here on.
Yes, and working capital cycle has to come down significantly.
Yes. Okay.
Combination of both this, yeah.
Okay, got it. Thank you so much.
Thank you. The next question is from the line of Rohit Ori from Progressive Shares Brokers. Please go ahead.
Hi, sir. A couple of questions. The first one being this phase 1 expansion. What sort of capacity addition or revenue or what sort of expectations are there from this phase 1?
I would like to repeat again. Whatever we have done in Hosur is an expansion. It's a normal expansion. If it is not Hosur, if it is inside the factory, it would not have been a news. So since it went to a different location, it became a news. So it is just an expansion of our existing product. We wanted to go a little closer to the customers and service from there. So the addition from this unit, we will not be able to calculate exactly how much it is, but this expansion will aid in the growth of 20-25% of the company.
Okay. So it's a good strategy to come closer to the customers where a lot of two-wheelers are there. There are 5 or 6 of them. So do you intend to cater to all the players or there is just one specific player that you're looking at?
So actually, one of the primary aim of going to Hosur is to cater to this two-wheeler segment, which is not our customer base right now. So we wanted to get into that segment, and that's also one of the reasons that we moved to Hosur.
Okay. Are you in talks with these 4 or 5 players or
not yet? Yeah, one or 2 yes, but not really.
Okay.
But we will have to start.
Okay. In terms of the dealers and distributors that could have been added during the quarter or 9 months, if you can just take us through the comparative number for last year same period.
Okay. Good question, but I don't have a number right now with me.
Okay, that's not an issue.
Yeah, but it's a good metric to watch. Thank you.
Okay. So you mentioned that the percentage of the revenue is coming higher from the switchgear. So going forward, do you think that the entire pie will shift or drift more towards switchgear being 65% of the turnover and wire and harness being around 35%?
No, I wish 65-35 will be good, but at least if we can maintain a 60-40 ratio, that is good. Which is what we are now going towards.
Okay. Okay. So the industry is looking at some next generation automation solutions, and some of your customers and competitors they're speaking of electricity 4.0, and they're looking at electricity and digital world. So any resilient or any efficient solutions that Salzer can offer in that domain?
Actually, most of our products, get used in such applications. So that's where we see growth coming in for us and our sustainability also. For your specific question, no, I don't have anything to offer right now, straight away for automation, but we are looking at it, and as I said, our existing products, whatever we do, is also a part of the Industry 4 automation.
Okay. So Salzer sold some 69 shares of KC. So should we be expecting more selling of this kind, and what do you intend to do with this proceed of approximately 60?
I have no answer right now, but as and when what the board decides, the decision will be taken. But as of now, no, I think this is what we have done. It is, I think, around 1% is what we have diluted.
Okay. My last question is related to the vision that you have.
Sorry? Regarding? No, your voice, I'm not able to hear you, sir.
You are saying that
hello.
100 come from the
Mr.
future.
Sorry to interrupt, but your voice is breaking, so we are unable to hear you. Mr. Ori, we are sorry, but we are unable to hear you, sir.
Now am I audible?
No, sir.
We are unable to hear you, sir. We will request you to please check your line and come back in queue. In the meanwhile, we'll move to the next question, which is from the line of Parag Shinde, an individual investor. Please go ahead.
Hi. So what do you think played the largest role in the 13.27% year-on-year boost in revenue for this quarter? So additionally, what is actually propelling the growth in each of the divisions?
I think I did answer this question. Yes, as I said, the new customers that we've acquired and the new products that we have launched in the last 2-3 years, I think they are all coming into the revenue stream. So I think that is what is propelling the growth. If you see for this year on year, actually in switchgears we have grown this quarter, or let's take 9 months. We have grown around 38%, and the main reason for that is this.
Right.
I'm saying it will continue to grow. Is also the reason is the product that we have introduced in the last 3 years and the new customers that we have acquired.
Okay. Understood. By the way, talking about operating costs, what factors do you think were responsible for, growth in operating cost, which has risen by 24.12% compared to the previous year? And what does the expense breakdown consist of, if you can highlight on that?
Hold on a second. I think the higher volumes actually helps in giving better gross margins. I think year on year the gross margins also has gone up by around 3% compared to Q3 FY22, and that the reason is the cost of material mainly. On the other side, I think the increased volumes gives better operating efficiency, and that is what we have achieved here.
Okay.
And I look at we further have scope to further improve on this.
Okay. I looked at the other income, which has seen a year-over-year decrease of 46% and a quarter-over-quarter decrease of 2295. So, what do you see the reason behind this decline?
Overall, I think the other income is quite small. somewhere around 40-50 lakhs. The reason I see the breakup, but mainly the other income consists of some windmill income, the wind power that we generate internally, and the sale of the export incentives. I think that's what comprises of the other income. So
Right.
I'm not sure quarter on quarter why this growth or not, but if you look at the 9 months period, we are almost at similar levels.
Okay. My last question, the wire harness revenue has experienced a year-over-year growth of 8%, but if you look at the quarter-over-quarter, there is a decrease of 12%. So, what would be the primary cause for this discrepancy?
Actually, we had very high expectation in wire harness in this year. Unfortunately, the growth year on year didn't happen. The reason was because our customers were facing a lot of chip shortage issue.
Okay.
So they scaled down their production to a large extent, which resulted in slower growth for our wire harness. Otherwise, in my opinion, I think we should have grown the wire harness business also by around 20-25%, as against 5% in 9 months this year.
Okay. And are you currently looking for any new product development in your business?
No, that's a constant process happening. There's so many projects that's always in pipeline, but there's nothing significant to just announce as of now. But then that's a constant work that we have been doing.
All right, that is all from me, and I wish you the very best. Thank you.
Thank you, sir. Thank you very much.
Thank you. The next question is from the line of Rohit Ori from Progressive Shares. Please go ahead.
So sorry for the technical glitch, and thank you for adding. So my last.
Sorry to interrupt you, Rohit, but your voice is still breaking.
You're
We
still
are
breaking,
unable to
sir.
hear you. Rohit, can you hear us? Mr. Rohit Ori, are you able to hear us? We are unable to hear you, sir.
Maybe, Savli, we can note down and request for what the question is, and we can give the answers for Mr. Rohit.
Sure. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to Mr. Rajesh Doraiswamy for closing comments.
Once again, I thank all of you for your continued interest and faith in Salzer Electronics. I'm looking forward to interact with you again during the next quarter call. Thank you very much, and all of you have a great day.
Thank you. On behalf of Salzer Electronics, that concludes this conference. Thank you for joining us, and you may now disconnect your line.